Hey everybody, it's Booksy. Today is Thursday, January 20th. I know I'm way off my schedule this week, but since we had Monday off, I decided to make a video on Tuesday. So I took Wednesday off, and I was gonna wait and make a video at the end of the day today. I might do one tomorrow morning and then another one over the weekend, but because we're getting to a place where the price action's getting pretty bizarre and crazy, and if you're like me, you're kind of starting to feel excited, and hopefully you're getting ready for this big move coming up that we anticipate. Nothing is certain in the stock market. You don't want to assume anything. So you have to sort of watch it day to day and monitor level to level. But I had a lot of stuff happen this morning. Had a really good couple hours of hanging out with Father and Ben's trades. And these two guys are, to call them my wingmen would be like doing them a disservice. They're their own traders, and they're very good and very smart, and both of them are doing excellent work in different areas. And we trade information, us and a few others, in a private Discord, and hive mind kind of thing. And recently we had somebody join, Crazy Trader Lady, or Crazy Lady Trader, or something like that. Lady Crazy Trader. I'm sorry, I'm butchering the name. But Ben's trade brought her in. He said, oh, this person's really smart. They have a lot of good charts, and they're pretty funny to follow. And so they wanted him in the Discord. And so Ben brought him on. And Crazy Lady Trader said that she said that basically silver is pre-running AMC. And if you've been following AMC for some time, you know that there are a couple others, like Bitcoin will often run opposite AMC or slightly before it. So the idea here that a lot of people are suspecting, I think Doge is also in that situation where it's kind of like a staggered cycle, if you will. But basically the idea behind that is that you're shifting liquidity from one run to another. And it's not like you have to be bullish all the time, right? If you're an institution, you're going to short and you're going to buy and accumulate and distribute. You're going to do all the things that you can do, right? But I think the idea is that you create liquidity on these massive runs, whether they're up or down, and then you can, of course, shift back and forth. And it would make sense that they would be hedging positions, right, in a number of stocks. So something like silver or a precious metal, typically when the dollar loses value, we see precious metals go up. That's not always the case, but in times of inflation, certainly is the case. And lately, dollar has been going down because our inflation rates are skyrocketing. And so naturally, a lot of people are pouring into precious metals because metals are something that perceived value doesn't really change that much over time. So they're thought of as like a more tangible security, right? If the markets are looking bad, and it's not just inflation, but it's just like if the market's bearish, a lot of times you'll see metals because people are trying to put their money into something that's concrete, which it is what it is. I mean, I'm not going to go into the, whether I believe that or not. But the point is like that's where the money goes often. So what's interesting to me, though, is that Crazy Trader Lady said that silver is front-running AMC. So you get a run or a drop on silver, and it actually will predict a run or a drop on AMC. And there are times, and I've not done a lot of charting on this, and I'm not going to do a lot of charting on this today. All right, I just started investigating it myself. I know they've put a lot of work into it. I know Ben has put a lot of work into it. But specifically, I want to talk about this, and then we'll visit like where we are right now. And then we're going to hop over and talk about some really important stuff with these these cat ear fractals that we also kind of ran through today. And then I'll talk about what's going on price action. You'll see the price action's moving because it's, in my time, it's 1:23, which means it's 2:23 Eastern time. So first, I don't know how in the world, Ben, I don't know how in the world you found this, but thank you for sharing this with me. So this is from around June 2019 in silver, and he found this particular fractal sequence that kind of blows my mind. It is our fractal sequence, and I know that my chart's a little messy, so let me clear it up a little bit first. I want you to be able to see visually what we're talking about here. And I know, again, my chart's a little messy. I ran out of chart space, so I'm using this chart. But yeah, just check this out. So basically, this is our 2020 fractal right here. You have a cliff, you have sort of a double top, you run down, you get a bounce, right? And then you run up into what we've been calling the T3 fractal, which is a breakout fractal. And this is where things, I mean, if you didn't think this looked exactly like this, just look at this particular region. I mean, it's spooky similar. And Ben and I were talking about this morning, and I said, hey, draw this line through there, because I had this weird thought a long time ago. And it's not really that weird, but I had this thought a long time ago that January was more or less just a fluke. It wasn't supposed to run up that high. It was really only supposed to test maybe the top of this range right here and set up lower, and that we were going to have this sort of a run that's more or less like would have been maybe here, right? Which would set up right around the top of this peak. And if you know, we've been talking about these spring fractals, which are really just sequences where you dip into a zone, you accumulate, and you come out. And it starts with a cliff and ends with a peak. This is basically a peak. However, it did not do what we thought it would do. And so as a result, I believe that the algorithm shifted around, and that this basically becomes the cliff and this becomes the peak. And I know that's confusing, but it's set up on a sideline. It doesn't really matter, because all fractals are just running into each other anyways. They overlap and sync up and yada, yada, yada. And if you've been with me for a time, you kind of, I feel like we've proven that time and time again, that things can be happening simultaneously on multiple levels. So it's a little complex, but basically this is its own sequence, and then this is its own sequence. And I had this thought that maybe these set up too high. So when we drew the, like possibly, right? So when we drew the line through here, I asked Ben to draw it through here as well, and it's spooky similar. And there's even like this push down through that marker, right, on the spring action. I mean, it's almost undeniable. And this would be January right here. You see that? And it's got this double push up. There's a clear like cup and handle, right? A cup and handle. There are some differences here, but the point is not to be like super nitpicky, because the idea is not that we're going to get all the answers for this right away. However, it's the sense that the fractal itself, the sequence, I should say, the algorithmic sequence, is intact on multiple stocks. And when you look at this, it's pretty undeniable that you see that cat ear there as well, right? The little paw and the cat ears. And remember, it could even be this is one of the cat ears. It's kind of ugly, and that this is actually more a representation of this section. It doesn't really make any difference, all right? They're here as well. The point is that this distributive fractal is really just a way of exploring a downward action, right, through a liquidity zone. So if you're going from the top of this zone here to the bottom of this zone, this creates all kinds of little gap spaces as you're going down. So for example, here's one. It's not very big, but there's one, and even there, I wouldn't even say necessarily it's been explored a little bit. Here's one, right, in this pocket right here. And what happens is that as it goes, it creates these spaces where you're going to kind of move in and out of these different zones. And you're basically just like ticking all the boxes in this region and exploring liquidity. And the cat ears are a distributive fractal. They're designed to kind of give you a sense that there could be a run, but there isn't one, right? And then when it finally finishes, it goes into a spring action or it goes into a run up. In the case of January run, January to June, we're going to talk about this in a minute. There's this really pivotal moment that happens right here that we need to address, and it's actually the key to understanding how to measure a breakout, like a true breakout for these particular fractals, instead of just continually going into spring iterations, which can happen. We've seen it happen quite a bit. Where do we actually identify a breakout, and how do we do that? Well, we figured it out today by just combining our heads. Mostly Father figured it out. Very smart dude, learning a lot from him. So anyways, the point here is that if you look at what happens, all right, this is your first big drop off. I would say it's mostly this region, right? there is a double bottom bounce type deal here. I know that my chart's a little messy, so I apologize. Perhaps you can interpret this whole section as either this or as this. It doesn't really matter. The point is that after a certain amount of time, whenever you do finally hit bottom, you start this sort of like cumulative run up. All right, that's like a push out of the region. And you can see there's a lot of selling going on, right, throughout this range. Just like we've got a lot of selling going on, but it's volume exhaustion too. So you see the volume going down just ever so slightly. You can see it flatten out a lot right here. All right, now these are not the same charts, so we take it with a grain of salt, but it's very interesting, that markup. And then what's really interesting to me is that line becomes this kind of it is a speed line, and we've seen this on AMC where it creates these speed lines, which will track all the way up through distribution. And when that speed line finally breaks, retests, okay, and rejects, it doesn't come back up, that's when you know that we're really going through a distribution. We haven't actually come back to this speed line in quite a while. And if you recall, I had some other, there's some other videos where I talk about that S-curve here. And there's multiple S-curves. One of them runs on top, this direction, and up and under, and it would act as like a momentum curve. And you can see that right here in silver as well. And we cannot really define this just yet. So it's almost useless right now because it's really difficult to define. But you can see that there it is, right? And in our stock, it's here as well. Again, a little bit difficult to define because January was a little bit more explosive, I think, than it quote unquote should have been. So it's hard to know if it actually overextended or if it really is just that vertical. Very difficult, to judge, in my opinion. And it's also difficult because you see how, in this case, I drew this to the bottom here, and then this one actually overextends. So there is a dip. You can see it right there. That would have set up like an inverse head and shoulder. I think that's representative of this dip. But you can see, like, even the way I'm drawing it, I'm kind of cheating. You see how this is the bottom. So it's hard to know. I could be wrong in the way that I'm drawing it. My point is that I think that once we have a defined bottom, we should be able to pretty easily figure out what this curve is. And I've already talked about this in other videos. This is nothing new. This is something that you see on a lot of these regions, going from like a t-test region, which is accumulation, into a breakout, and then you will retest the momentum curve and come back to it multiple times. My point is not to say, oh, we're going to ride up just like this. That's a possibility. However, look at the steepness of this curve, okay? This goes basically parabolic. You see that? So it's pretty harsh. And I think if you mimic that on this side, you're talking about a pretty steep run, okay? I do, however, think this might be indicative of what we may see in the next few weeks leading up to a big run, which will look a little more like an ascending accumulation, in my opinion. And I've talked about it before a couple times in a couple different ways. I don't really particularly care how we run. Like, that's not my concern. I think it's healthier to run with steps, but at this point, we've explored almost all the liquidity in this zone, so a move up could be pretty violent. Or it could move up quick, run sideways, you know what I mean? Like, it's going to create those little peaks that we just talked about when it comes back up out of a range. So I would expect there to be a peak. Basically, this one's all on an angle right here. And this is the new one that we need to talk about today, this larger one right here going down. But this bigger one is done, essentially. Whenever it hits bottom, it's done. So after that, I would expect there definitely to be a peak around like 40, 42. And that would be in a reaccumulation zone. Basically an SOS of sorts. And then there would be another one. So that's like on this spring fractal. And there'd be another one over here. So why am I saying all this? Well, silver seems to be predictive. And I'm not going to, again, go into too much detail about that. Let's go to the modern day chart. What I'm going to do is just take a look at, I'm going to do this live because I actually haven't done this yet. I'm eager to talk about some other things, so I want to sort of hit this and then we can talk about some other stuff. I'm going to go to the 3 hour. I'm going to see if that takes me out enough. Maybe. And then I'm on the 2 hour over here. Yeah, try not to worry too much about the noise. You can see here right about there. That's definitely close to 1-to-1. This is the first major drop here. This would be your head and shoulder looking thing. Certainly that is our spring fractal. Very, very cool. You go up, you get the double top. These would be like your cat ears. They're kind of ugly on this one. You run down to the bottom here. And at this point, it's unclear whether, and I think this was the question that Ben was asking me earlier, and he's tracking it right now. He may already have an answer because he's been messing with this. But this looks like a push down. Walks all the way down, but we kind of stopped halfway. I would say this is the largest fractal going down. See though, there's like one platform, two platforms, one platform, two platforms. If I'm looking at like the biggest ones, that's would be my estimation. And then this would be the push down. And then we're seeing like an ascending accumulation. I guess you could also argue that this is the bounce. If you're looking, I'd have to again check with time. You could argue that because maybe the time is in sync and I'm not seeing that. You could say this was it, and then this is the final push with the ascending accumulation that's happening. That's also a possibility. However, this is kind of weird. This doesn't really line up with a whole lot. And the idea here is not that they're 1-to-1, but that rather, while this is running straight up, this is kind of like back in time. I think it's a couple weeks difference. So it may be like back here, right? If you look at this particular fractal here, that is a spring fractal. You can just tell by looking at it. It has that very typical, almost like a bird. That's always how they look, right? That's pretty typical. The rest of this I'd have to dig into. So this is definitely something worth looking at. I would definitely go and check out Crazy Trader Girl or Trader Lady, I'm sorry, and Ben's Trades. And shout out to them for bringing this up in the Discord and to my attention. Now I'm going to talk about just AMC stuff for a bit, and I'm going to try to keep it brief. I know I've been going long already. So there's a couple things I wanted to mention. First of all, we've been looking at these like little cat ears with the little paw, and it's very cute. But remember, these are, there they are. These are fractal sequences that are playing out. And I don't know what the deal is with people on YouTube. I don't want to give them a whole lot of attention on my video. But people that are coming and on here and commenting like, there is no sequence or like there is no way to, like, look, you guys are just not paying attention and that's all there is to it. Rant over. So let's look at these cat ears. So these cat ears are distributed fractals. We saw that they were shrinking. They did shrink to a point. Now we're starting another thing. However, you have to keep in mind that these suckers are going to iterate in different ways at different levels. And one of the things that I guess we're going to need to talk about first is this idea of a breakout. What happens during a breakout and why is it different? Okay, we're going back down to that pocket. That's okay. I still think we're going to see, we'll see what happens. I'll have to look at it more closely. I think we're going to see another push up. Yeah, I think we're expecting this to go down and then it's going to like push out. And I'll explain why I think that's going to happen. As it's going down, I'm saying that. So I'm putting myself on the line here. What's going on with these charts? I guess this is a copy. All right, so what happens during, I apologize for jumping around like that. What happens during a breakout? Well, during a breakout, let's go to the cat ear chart. It's going to be a little messy. We'll live. All right, my charts are messy right now because I'm just having a lot of fun tracking everything and making sure everything's up to date. So this is a cat ear right here. But this cat ear, this is a paw. It was way overextended, right? But this is a paw basically, and then this is a cat ear. Why did this cat ear break out? Well, you'll notice that this cat ear never went below the face of the cat. And what I mean by that is really simple. Like this right here, if these are your ears, this would be like where the face is, where I would draw the face, right? You see how there's a stopping point and it didn't go below it. But what is this exactly? Well, I've talked about it in other videos. Yes, this says spring 3. On the macro it is. But on the micro, this is also a spring fractal. There's 1 here, 2, and 3. And we've seen this before. If you look at the December, I'm going to go to the 5 minute, and I'm going to go to December of, yeah, sure, why not? We're going to go to December, if it loads for us. All right, here we go. That cat just waiting for you to say hello. This makes TA a lot more relaxed. This is what we needed. So you have, yeah, this micro cat ear sequence, okay? And you'll notice that this would be considered spring in the macro, right? Spring 1, 2, 3, 4. So this is spring 3 in the macro, and 4 is a markup. But the point here is that as you're going through this sequence, okay, you can see that it doesn't, the cat ear right here, it doesn't break down again. It doesn't. And there is one here as well that doesn't break down. Right? We could talk about this all day. We would never finish. But I want you to look at specifically this region and what happens that's a little bit different. So here in this cat ear sequence, it breaks down. It goes to about a point where it's essentially, it's kind of matching up like the line that's been supporting this, all right? And it breaks down. So that would be like looking at this trend line right here, okay? And in this trend line, right, when it gets to this point, it breaks down. When it does that, it goes into a deep spring. When it doesn't do that, it catches, it gets the liquidity it needs. If it doesn't need to go any lower, it goes up and it forms a spring much higher. And this spring in Wyckoff terms just becomes like a buy up, right? Like it's just like another LPS basically, like as part of like a larger SOS type deal, sign of strength. So it's not that complex. If you just kind of look back on it, they sort of hit all their marks. They go up above. You can see there's this little trading range gap right here. They go above it, and they go right into it and below it, and then go through it. So something similar happens here, but it happens after a long dip. Now, when you compare this to the macro fractal that we're in, somebody told me in the last video, I hate the word fractal now. Look, I don't like saying it either. It's annoying. I also don't like saying spring. But this is the only way I can describe these things at the moment. So we're going to use the language that we have and not be babies about it. So right here, you see this. There's the cat ears. There's a little fist bump. All right. Now, the same thing was here. And this is, remember, everybody thought, we're back here because it happened. But it didn't happen. It was roughly the same. Okay. Basically, what we should have been looking at is what happens after, right, this particular moment. And you have like a breakdown halfway right down the face. So if we were sort of mapping this out in a similar fashion, you can see that, yeah, like it's pretty similar. There's this moment where it goes up, and we did kind of have like a fake out, but there's no volume. And then it dips below the face. And at that point, we should have known, like, this is, see that? This is distributive. So you were to draw this more sideways, you can kind of see what I'm talking about. Do you see how one of them passed, like bounced off, stayed above, the other just went straight down through it? And there's different ways, of course, of drawing this. I don't want to get into like the nitpickies of it, but the point is like every time we see it come to that point, if it breaks down, then we know we're going to go into more distribution. It's going to iterate again. If it comes up and it really gives us a sign of strength, we know we're about to break out. And this is definitely, like, in my opinion, this is one of the best ways that we could possibly judge a true breakout. Something else that's interesting that I noticed is that if you look at the fist bump on this one, all right, there's 1, 2, 3, 4 touches, and then the fifth one breaks, right? This has been something that's been talked about since like the beginning of AMC, okay? And yeah, you could draw this flat and you could basically have the same argument, 1, 2, 3, 4, and then the fifth one breaks. Doesn't really matter. The point is that I noticed that this fist pump with the cat ears creates a trend line, and that's where you're looking at where is it breaking. Because if after that cat ear you come above the trend line, that right there is your sign that this is actually going to break out. And where that doesn't happen or hasn't happened, we know that it's going to need that 4 to 5 touches. Basically, it's just saying, like, we're confirming, liquidity and support or whatever. So in this case, yeah, maybe we already have 1, 2, 3, 4, right? Maybe. Or maybe we only have 1, 2, 3. But this is super, super critical, okay? I'm going to delete all this crud. This doesn't help me. I tried to do all these math things. It didn't work. Look, we have 1, 2, 3. We don't have a fourth yet. In my opinion, we might have 4 here if you count that, but I'm not sure we should count it. Maybe we will break right through it. But I'm going to keep it up right now because I think that 1, 2, 3 is important. All right, I'm going to get rid of this. Let's look at the next one down. Oh, no, he lost his face. We've got 1, 2, 3. We don't have a fourth one yet. Okay, are you starting to see what I'm seeing? Yeah. This is really, really important. 1, 2, 3, breaks, runs. Same thing over here. All right, 1, 2, 3, breaks, runs. Markup. You see this? Even on this macro one, it obeyed the same rules. You had the 1, 2, 3, and then on the fourth time, it finally broke. This one's kind of crazy looking because it got crazy. It actually came back in and did number 5. So the fourth one was the push up above, and then the fifth one actually goes through. And I've seen that a lot too on the micro. So like 1, 2, 3, 4, 5, maybe. Okay. So it's really interesting to me. I think that what this means to us, we're just applying these like old, obvious rules that everybody else has already kind of pointed out. I'm going to give him his face back. But basically what we're saying is that this is a method for us to track breakouts that's more, and I know this is like common sense. You're like, well, Booksy, I can draw a line and say this broke above the line. Well, yeah, duh. But do you have bongo cat faces? And do you have the ability to say, oh, I know maybe on the fourth or fifth one it's going to break. This might even count right here as a 1, 2. So that means the fifth one should break. It may not be much of a, it may break it and come back and test it as a support, but it may not actually provide much resistance at all. Since we've tested it so many times. It's also really big, so we might have to. But yeah, look, 1, 2, 3, we haven't hit it again. 1, let's go smaller. 1, 2, 3, we haven't hit it again. Let's go smaller. You're like, how small can this guy go? Here's 1, 1, 2, 3, up. We got the test on it, but look what's happening. Look at what's happening. It didn't go above it again. Isn't that interesting? So remember earlier today I drew this thing and I thought, oh, it's going to push up above here. Why didn't it come back up? We've seen this on other springs where it pushes up above. It didn't come back up because it's following a macro fractal. All right. And whenever you have a macro, the micros are subservient. They follow it. It's like lemmings, right? So they're not going to go further than the macro tells them to go. This algorithm wants to do some liquidity exploration. All right, so look, 1, 2, 3, 4 went above it, just like it didn't, right? And then 5 did not break. This would be a signal to us that it's going to stay below here and it's going to go down into a distribution, like a deeper fractal. Okay, and it did. So that would be your signal to say, I'm not saying I'm day trading this, but at some point in the future, I want to. Like, okay, it didn't go above it here. So therefore, this is the fifth one. It's going to go back down. It's going to go into distribution. Okay, not a big deal. I wouldn't panic about it. Look at this one right here. All right, 1, 2, 3, and then the fifth one breaks above. I like my little ninja cats. I have them arranged so they look like they're coming down, like and going hi-ya, or all right, bounce. I just saw them as like action pose because they look like their ears or hair whipping in the wind. Now, this one in particular is actually a larger one. So this is actually a big ear, big ear. But I'm not going to worry about that right now because it doesn't really matter too much at this point. It broke up. And this one was the finisher. So there's one here, distribution, and then this one, you can see it didn't go below the face. It actually, if you look at the angle here, you see that line? It didn't go below it on that dip. It tried to this morning. We don't know if that was intentional or not, but it confirmed that trend line, and then it pushed up. Big volume came in. So this is what the bigger institutions are watching. So they're coming back to basically neutral today, is what it looks like. Pretty ugly, right? Well, maybe, but look, we got another cat ear forming right now. And this is oddly right where I drew it. That's kind of freaky, right? It's very similar to this one. Now, what's missing here? Well, you see how it hit that region? This was a support. All right, this is where we bounced earlier today because this was a higher liquidity zone. I know it doesn't look like it right here, but if you zoom out, you'll see it. Boom, you see that? That provided a support. All right, but it didn't go above this region. They said, nope, not yet. Now look, it's left a gap up here that can be explored later. They're not ready to explore right now. And remember, we talked about this. This is the fourth touch. So the next time it comes up through here, you're going to see it's just going to, basically it's going to pass right through it. It's going to pass right over this region for the most part, okay? Yeah, we're going way beyond that. So we may even go down and get another touch here. I would be kind of surprised if it did bounce here. This looks really weird. 1, 2, 3, 4. So this is another rule. Is I think it obeys the same thing going down. So we may have to observe the rule going down as well. I think my line's a little bit off here. I don't know. Maybe that just went below it. We'll see what happens. But this to me looks like the bump. You see that? The bump. And this is something I wanted to mention is like you get this on the right cat ear, you get this bump on the way down. And that bump is right where you would expect it. If it's going to turn around right here, that's where it should turn around, basically. If it doesn't turn around at the bump, you're going to go deeper. So that's the thing that we got to kind of pay attention to. You can see the bump even on this one on a larger scale. Right here, if this had caught and started moving up, okay, we would have said like, okay, it's ready to move. But if it keeps going downward, it's got to finish the spring action. And that's what's happening right now on the macro. I hope you're tracking with me because I know this seems a little all over the place, but it's actually really important. I kind of like that it's going down. I know that sounds really bearish, but this like throws me off. We'll see. It could be really exciting tomorrow. On the 2 hour, this doesn't look that bad though. All right, so check it out. I've been messing around, so I'm going to come back to this other area. So I've been messing around with this stuff, and I was looking at these different regions. Let's go to this one. And specifically, I've been looking at this weird S-curve that's been drawn, okay? It seems to be respected here and there. And I've noticed, this could actually be more at an angle now that I'm seeing it. Yeah, I bet you that's it. This is going to be more like, perhaps like this, lower. Great. Yeah. All right, so what I've noticed is you see this S-curve? A couple days ago, I was thinking, I wonder if this whole region right here is correlating to this region right here, and this drop is correlating to this right here. And the reason that I thought that, of course, right now it's not looking very good. Looks dismal, doesn't it? We may just leave this area. We'll see. The reason I thought that is twofold. Number one is I noticed, remember I had drawn, I don't know if you probably don't, I had drawn that arc down. And I noticed that after the arc down, when it started breaking out, it looked like it was starting to move up into like an ascending accumulation. I thought, well, that's kind of weird, because you wouldn't expect it to do that. If it really did break up, you would expect it to just run, not sort of coast up sideways. So then I zoomed out and I said, well, wait a second. That bottom, which I drew yesterday on Twitter as like a shrugging cat, I see that shrugging cat right here as well. Here's what I think's going on. I think we're forming like a larger version of this, right? So you have a flat, you have a dip, because this definitely matches this. I'm feeling very confident about it, although I'm watching this price drop. I'm like, oh man, I hope I don't embarrass myself. But like this, okay, is like this flat region, very similar. You've got this bounce here, right? Bounce here, okay, on the tiny region. All right, we've got this big bounce. I'm sorry, this bounce. I'm getting confusing myself here. Yeah, it correlates to this bounce. So you get the idea, right? And then on the macro, if you're looking at this big move versus this move, what we would expect is to push up and form another cat ear sequence. We know this is a cat ear sequence. It's not quite easy to read, but this is the fist bump right here. This is ear 1 and this is ear 2. So we would expect there to be like a fist bump, ear 1 and ear 2 on this side. What's interesting is, remember right here, they kept it below. So they weren't ready to break out yet. But the next time it passes through here, it's just going to move very fast. And then what I was looking at is, okay, what other parts does it need to break? And I went and I looked at this particular sequence, and I thought, well, there is another one. There is another. Wait, it's Yoda that says it. He's like, no, there is another. Skywalker. That's two different parts of the movie. When I was a kid, I had no idea what Yoda was saying when he died. I just could not understand him. It was literally like a decade later when I was like, oh, he's telling him about Leia. And I know there's like context clues, because obviously Luke goes and he's like, Leia, my sister, to Ben, you know? But I was always like really confused. I was like, what the heck is he saying? It's so gurgly and gross. Anyways, look, 1, 2, 3, so this would be 4. Now, if it pushes up above here, you can see this is a gap zone. I expect this to be, honestly, the number 4, which means it would pull back after. So we've got that big S curve, right, that could propel us into a push up. And where would it push us up to? Well, it would probably push us up to this cat ear sequence, and that would be test number 4. So after test number 4, you don't break right away, then you're going to go down. So that's when we look at this region. I don't think it would be quite like that. I think the cat ears would form, I drew it a little wrong. I think they would form over here, and I think you would have like a fist bump. Does that make sense? And it may even be, because we know there's one here. This is the one that's here. So that would be 4. It doesn't break on 5, just like we saw right here. So it's basically, it does a bigger version of what we're seeing right here play out. And this is how I think, if they're going to, so this is the 786 on this move. Y'all are like, this is way too much tea leaf reading, man. Okay, it is now 8:17 p.m. and the day has played out, and I was wrong. It did not bounce back in this region. I watched it for a while. I watched it kind of hit each of these little levels, and this is a very mechanical walk down. It's very, very mechanical looking. So to me, this, if I was ever to say there was a short ladder attack, this looks like it to me. Now, I do see a little bit of the fractal in there, but not a whole lot. I think each of these might be one of those steps. So maybe like 1, 2, 3, and then this would be the bottom. I don't put a lot of stock into this right here. However, I will say that you know, like you look at it on the 5-minute and it just looks so fake. I mean, look at this. Just look at that. I mean, it's like almost every part of this is not the exact same, but very, very close. I mean, it's very strange. 14, I mean, look at this, 14,000, 14,000. Yeah, if we were to like average these, you know, it's just so mechanical. That being said, this is the end of the cat ear. So we got the final part of this, and this is a cat ear sequence. So this makes sense to me. I want to just say that I was wrong about the nature of this particular move being a big breakout. I saw it as a breakout to move to the upside. And I talked about this chat. I don't want to erase everything I talked about because this may still be relevant. Like, we don't know exactly yet what's going to happen tomorrow. If you want to know my personal opinion, I think what would be ideal is one of two things. I think that you either get the gap down in the morning, which would be amazing. That'd be the best situation, just to say like, hey, it's filled, right? Give people an opportunity to buy really quick and then move up and get out of there, right? Or just to say, hey, we filled the gap. Or we go into a situation where we do bounce pretty quickly. Maybe we get a double bottom here, and then we basically just fill out the rest of the stuff that I talked about earlier in the video. I don't think that either is necessarily a bad thing, but I will say that what I'd be most comfortable with at this point would be just a quick gap down. And the reason for that is, or not go down at all. Like, those are the two options. I don't want to see, and this is what I hate saying this because I feel like it's going to end up happening, but what I don't want to see is I don't want to see like a slow walk down necessarily, unless by the end of the day we really see that push out. Because if it drops, if it starts slowly going down, what's going to probably end up happening is that you're going to end up needing to explore this region and gather shares. So if, you know, I know everyone was talking about the SPY. The SPY is going for a gap fill. There's some other stocks that look very distributive, and this does right now as well. But it's not to the point yet. You can see they left it in limbo. It's not to the point yet where it's a sure thing. This could play out like a little spring, and it could look a lot like what we saw on December 15th. Or excuse me, December 16th and 17th. Now, this is goofy looking, the way I drew this, but really, like, this is a bottom. It hit a weird kind of bottom. I don't know if you can count that as the bottom or if this should count as like the ledge, but this is a really dramatic way to draw this, but there's a simpler way to draw it, which is just to say like, yeah, it's a little more like sideways price action wise. I think it was like down here is the way I did it. So this is a smaller one. And yeah, and this makes sense to me too. I think you have to sort of be willing to say like it could be either or. The after hours is like throwing this off. There you go. It doesn't look so weird. Yeah, and it's, again, I don't like doing that to y'all. I know that that's frustrating. I always try to think of the most likely situation. Right now, I'm really imagining, I see these breakout lines, you know, and I'm not sure, but I think it's coming back down to test this one right here. And we're going to see it. It's kind of a fake out, right? And we're going to see it move. I think they want everyone to think they're going down to test 16.5. And if they do, I just pray that it's quick. It's just a really quick touch and go. I don't want to spend a lot of time down there. If we start settling in there, it won't make a lot of sense to me. And this means we're in another iteration, like another step, and that's not a good thing in my opinion. Although I will say, based on what I've already shown you, right? I will say that we talked about this cat ear thing a couple times recently, and you do see them repeat quite often. And right now, although I'm pretty bullish on this whole action, I'm hesitant to say there is a double cat ear here, but this is one right here, and it did break up. So that's why I'm saying it's pretty unusual that we got this breakout, unless, again, the point was just to sort of give us another touch on one of these lines, you know. So I'm going to explore some more. If you're interested in knowing what I find, obviously you just hang out on Twitter or follow me or whatever, and I always post a bunch of junk. Yeah. Anyways, I hope I have a good one. I'll talk to you later.